welcome to another episode of Fintech Focus TV with me, Toby. And today, absolutely delighted to bring to you Daniel Shepherd, who is the CEO of BTON Financial. How are you?
Hello, good morning. Yes, good, thanks. Thanks for having me.
Absolute pleasure. Listen, great to see you. And we've just been having a little bit of a pre-chat, and it's good to hear that the business is going well despite everything that rages around us. And nice to see someone in an office as well, though maybe not as crammed as usual. But listen, it's a really interesting business that you've got. You've had some recent recognition, which is lovely to see. Best trading application of AI in the Bob's Guide Awards recently. And I know that you guys have been getting more and more traction on all of that sort of stuff as well. So congratulations first and foremost on that.
Thank you very much.
Daniel, tell us a little bit though, for those who haven't heard of that or seen too much about BTON so far. Tell us a little bit about what you're doing and the background and the story of the business today.
Yeah, cool. Thank you very much. Right, so BTON Financial, we are what we call ourselves an in-sourced dealing desk for asset and investment managers. We're all about automating the workflow in the front office at asset managers, just trying to bring in a real data and technology angle in order to increase efficiencies and drive better results for the end investor, basically. So we've been going for nearly 3 years now. It's time flies when you're having fun. I mean, I guess I'll give my background. So I worked in finance for quite a long time, more than probably a few of the viewers. I've worked in Hong Kong, in Tokyo and London, predominantly for the SocGen Prime Brokerage Group. And it was on my second trip to Tokyo when I returned here that I thought that it seemed that technology and data was really the way forward, rather than people picking up phones, which is what I used to do. I used to sit on the longest trading floor in London or something. There was hundreds of people all picking up phones and clicking on mouses, and I sort of shifted a little bit, pivoted, as the word is now.
Very trendy now.
Yeah, it is, isn't it? So I pivoted into my first fintech startup. That was called AlgoSpan. That was low latency market data and connectivity for kind of latency sensitive prop firms. We had quite a few customers. Merrill Lynch was one. That was quite a change from working with people who were, to traditional market participants to kind of this new electronic liquidity provider type of firms, as they're now called, who were considerably smaller in scale in terms of headcount, but definitely bigger in scale in terms of technology and data analysis and using technology to trade really quite vast volumes. So it was a really interesting 2.5 years. From there I went to help with the Trade Echo, which was the London Stock Exchange's MiFID II trade reporting platform. And yes, as I was saying to you before we started, actually, it's kind of the opposite of now, where if you've got London Stock Exchange hat and a MiFID II badge on, and sort of 2017 coming into MiFID II, you end up going into pretty much everybody's office. And we were doing 4 or 5 meetings a day in different offices, and from the whole spectrum of finance firms, from the very largest asset managers to the very smallest sort of hedge funds, and from the biggest banks to the smallest boutique type brokers. It's a great seat actually, because having come from the sort of slightly more secretive world of prop trading firms into this, where people were just really keen to get over the MiFID II hurdle and make sure they're all in place regulatory wise at the beginning of MiFID II. So I came from this kind of tech background, automated trading, and was in a lot of asset managers' offices, and the same problems kept coming up over and over again, which were, the costs are high. They're going to be going higher as MiFID II comes on board. We have to obviously all the unbundling of all the services. And it was in a couple of sort of asset managers' offices on an Edinburgh trip, actually, where someone said, well, we just can't see how this can work post MiFID II. The costs are going to be too high. We know how much our trading desk costs. We've got to pay for research. We've got to pay all this MiFID II stuff. We've got to spend much more money on electronifying our trading processes. going to have to see how it goes. So that particular guy said, it's fine for us, we've got the scale, but it's going to be hard for a lot of the smaller ones. So that was a real kind of light bulb moment where I just thought, well, hold on a minute, this is a problem that is clear. It keeps on coming up again, and this is something that I've just been working with because all the technology firms are out there, the data analysis is there. We can solve this. So that's when I started the move to start BTON Financial, and then we got it going at the beginning of 18, really. So
I love those sort of stories because it so often comes from a problem, doesn't it? You see that, you keep on hearing the same sort of problem come up, and there's a solution which can be provided to them, and those businesses. And I study this, studied this a lot over the last few years. The businesses who are really sort of solving a regular and genuine problem and providing opportunity with it using great technology are generally tending to prosper and really guide through. So 2018, you launch. You've got a business there that's got a good idea and solving a problem, as you say. It's not been an easy 3 years to launch a business with one thing or another.
Character building.
Tell us a bit about navigating those icebergs, because you've had a few thrown at you, haven't you? Since
exactly. Yeah, it's been fun, I suppose. But I mean, ultimately, it was a problem which was so clear. I think it was just I was lucky enough to have that seat, perhaps, to see how clearly that problem was, and see behind the curtain of a lot of firms and see how the operations worked. So yeah, I mean, it's been obviously it's been a challenging time, but it's been incredibly educational and actually quite good fun. So obviously there was a bit of time setting up the firm and getting a great team together. I've been really lucky to get a really good team. So from people I kind of met along the way, again from the trade reporting seat, met quite a few people across the asset management industry. So we've got a really great team of techies and former asset manager employees, and obviously had to raise money for the business, it's going well. So obviously, last year was a challenge for everyone. Market volatility, obviously, business continuity plan all year long for 2020, but ultimately automation, technology, data, sort of machine learning, using that data to get the best results. That's not really going to be going out of fashion anytime soon. So we're really well placed right now.
Yeah, it certainly isn't going out of fashion, and if anything, sort of rages ever further on. And it's been said a lot, even on this show, that 2020 was really the accelerant to a lot of those technologies that you've spoken about. I see no reason for that, as you've just intimated, for that to change over the course of 2021. Tell me a little bit about how automation and data are sort of fueling the sort of next wave of efficiencies in asset management.
Yeah, I mean, I totally agree with you. I think this past year has probably pushed technology forward in the sort of capital markets as much as 3 to 5 years, possibly. It really has accelerated things. And I think the investment management and asset management industry, and actually large firms in finance as a whole, are much more happy working with, or want to work with, this sort of ecosystem of fintechs that are now growing up to solve a lot of the problems. That's obviously where we come in. In terms of automation, DR sites were possibly not the best solution, because actually we've all ended up working from home. So there is everything being in the cloud. People are much more open to that, and that's why we've really actually well, again, it suits us because we've really gone the way of sort of the new level of business where we're software as a service. We're in the cloud. You can access us from anywhere. It's all about automation. Initially, at the beginning, when I talked about sort of the outsourced desk as a whole, there was kind of pushback from, well, we really like having our traders in the same room as the PMs, and that's not really a thing right now. So I think people are much more comfortable with sort of working with partners, and obviously everyone's already had a sort of a dry run, if you will, of, in a sense, working with external folks, because everyone's been working from home, so they're not in the same room. So obviously it works.
Yeah.
and using technology and data to improve matters, it seems a given now. So, I mean, ours is a little bit different. What we do is we call it our smart broker router. It's our main product. So everyone kind of probably listening to this knows what a smart order router is. And we've just moved it one level up the chain, as technology always does. It's a bit of a freight train coming that is unstoppable now, the tech and data move, as you're seeing in the markets.
Absolutely.
So the smart broker router is basically using data and technology to route orders from our customers to the most appropriate execution algo at the most appropriate broker. So we use a number of different metrics, and all the data is then pushed through transaction cost analysis. That is then collated to create a statistical picture, removing various outliers and so on. And then that data sits within the smart broker router, so that when you, for example, place an order, whether it comes in by a fix or via our front end that people can use, that gets routed via our SBR into the correct execution algo at the brokers. And so many, we really focus on equities and ETFs and listed derivatives, but equities and ETFs really are, so electronified. It makes sense to use execution algos for most of them now, especially in the sort of developed markets. So we're a bit different. So there's other firms that do sort of outsource dealing, but none are really focusing on the data and technology angle, which is coming at us.
Yes, so I think, look, it's all really interesting, particularly with that sort of data and tech angle, and being able to be different around with what you're doing in that sort of space, and it leaves opportunities, I think, for the industry to improve and to look forward and to benefit from the use of technology. Tell us a little bit about how the buy side can really embrace that challenge.
Yeah, I suppose this past recent time has kind of opened the door to this embracing of the technology, and it's definitely happening. You can see from, again, we're quite well positioned in the market. We've talked to an awful lot of people over the past year, all obviously via Zoom, but you still you're getting the message, which is firms are really embracing the change and looking to work with these smaller companies. And data can really make a difference, because I mean, I used to be on a trading desk myself, and if I have 100 orders coming in into my blotter every morning, and most of them have to be in before the market opens, personally going through 80 plus pages of TCA on every single order to make sure I put it into the right place is going to be unworkable. And so that's where really technology comes in to sort of smooth and speed up the process, take away a lot of the human bias that is still prevalent in some of these choices possibly. So I think it's going to be it's already starting to happen, and I think it's a positive move for the market. Okay. And certainly we're getting a lot more inbound calls and inquiries, asking people us how it works. Well, you're quite different. It's been really exciting few months. And I suppose as Q4, where a lot of firms are kind of on hold, but they've obviously, you can't be in BCP mode forever. So I think a lot of firms have now, they've allocated budgets in Q4 last year. Yeah. Things are changing, and there's been a few projects which were possibly put on hold, which are now coming back online. And things are definitely happening now, because it definitely feels different. So last year was kind of about some consolidation and building on what we already have. But getting the name out there, and now there's really, as you mentioned earlier, with recognition with awards, and you can just definitely see it on inbound traffic. We're getting quite a few customers coming on, which were, they came to us as opposed to the other way around, which it's always a nice thing. That's always the dream, actually, at the beginning, when people approaching us without us having to go and knock.
Well, Daniel, when you provide a good service, it tends to spread, doesn't it? And that's clear. Clearly, there's clear advantages to what you're doing, and I love that innovation. I think I noticed you put out on LinkedIn recently about it's good to see that innovation being noticed and being noticed. It certainly is. So with regards to that, that you mentioned there about the sort of caution in the marketplace over the last year, which we've all seen. And as I say, look, in certain areas it sort of accelerated, very rapidly. In other areas it was still a little bit of caution. And we've seen the financial sector probably being a little bit conservative in over many years about its adoption of external partners, its adoption of technology.
Yeah.
As a business which is still very much in its infancy, and we know the sort of procurement bottlenecks that can have happened at various different stages. Tell us a little bit about how how this has changed some of the attitudes, and or has it changed some of the attitudes from your customers into allowing smaller, more innovative, arguably and quite probably more beneficial businesses to really help them accelerate their growth through this sort of period?
Yeah, we're definitely seeing a change in that. People are much more open to it. Again, we're a little bit different from some of our other peer group, I suppose, in that we really work with the firm and they can leverage us to do kind of, the whole more with less thing.
Yeah.
Ultimately, the head of trading at firms is kind of, we're their best friend because we enable them to do less with more. We enable them to leverage the data and technology. We enable them to kind of focus on what it is that they can really add alpha on, and they're massive in scale, or they're very liquid stuff that still needs them to get involved with it, and throwing the entire thing over the fence at somebody else isn't necessarily what one would want to do. So actually, they can take less risk by using us because, from a BCP level backup plan to sort of turning the volume up a little bit. And then as they become more comfortable with it, they can put more and more flow through us and focus it on what it is they do best. So yeah, working with smaller firms is definitely coming. You also get that kind of economies of scale because a few years ago, and I've worked for a few of the big banks, they'd want to build it themselves. And it's just actually a much bigger risk because you have to put so much more capital and time and resource into building something, which actually, if you partner with, X amount of our customers, then you're really getting all that data and new technology for a fraction of the cost and way less risk because you've got other your peer groups are using it as well. So it does make a huge amount of sense. And I think that's why so many of the banks and asset managers now have sort of innovation arms, and they're keeping an eye on all of the latest moves in these new fintech companies, because a lot of appearing. I guess the past year has sort of may have weeded some of the sort of weaker hands out, but there's lots of exciting firms coming up, and that's why I guess it makes huge business sense to embrace using some of them to their own advantage.
Definitely. Let's talk about that exciting times, because I think it's definitely that's exactly my viewpoint of what's happening out there in the marketplace for businesses like yours. Tell us about. Let's look to the future a little bit. What do you see as the sort of growth pattern of the company? What do you see as some of the things that people can expect in 2021 for you? Because I know it's an interesting year for you as well. Map out the future for us a bit.
Yeah, it's also nice to hear some positive news, isn't it, for a change?
Exactly.
You know what I mean?
That's what we set this up. We said if you want the negative, then turn on the BBC because there's plenty of it for you. We want to be a beacon of hope here.
I think a lot of people don't watch that anymore. So 2021 is looking good. Obviously, we just want to keep on our sort of aggressive expansion plan. We're just about to announce a US hire, so we're going to start having representation over in the US because North America is obviously the market we want to target. So it's all about just carry on growing. Obviously, we're kind of really scalable as a business, so we've got everything to have huge amounts of flow going through already. It's all sort of in the cloud, as I mentioned, so we can take on as many customers as we need with our existing infrastructure. But yeah, it's all about sort of getting out there and working with some sort of slightly bigger partners, and got a few announcements coming out over the next few months. So it's exciting times. It's good fun. It's been character building, but yeah, it's good stuff. Going out and ultimately we not necessarily a people business as such. We're a technology business, so it's all about growing out and getting more and more customers and becoming the sort of the premier solution for our piece of the marketplace, really, which we are becoming. So it's exciting. That was always the target.
And how does that happen? How does you sort of move from a company of that sort of size through this sort of period to becoming this sort of go-to in that space? I mean, you mentioned there the inbound. What are some of the keys to attaining that sort of position in the market?
The team is strong and good. We've got former CERN physicists on the team. We've got former senior sort of people at asset managers. We recently got a new non-exec director. He was MD at Tradeweb. We've got sort of some high profile team members, quite, highly experienced between all of us. We've really focused on the technology team building, but also, as well as having a strong governance and making sure that we tick all the correct boxes in this GDPR world. So it's really about just the building on the momentum which we've already got, really, which is good. And the benefits of the data leverage and the machine learning and the technology and the automation are sort of plain to see now, not just across our industry, but across many. And you're seeing a real sort of change in the way a lot of businesses are operating. So I think it's just people just getting our name out there, and people are more comfortable with using us. And once there's, it makes it much easier when they've seen their peers using the system. And then, as it often is the case in finance, we're not always the first to take up the technology, but we're certainly a very fast second place, and we embrace it quickly and move quickly. So I think as an industry, this is obviously happening now.
So it's those early adopters and the sort of malleable masses that follow there afterwards as well.
Yeah, and actually, as we go on and get bigger, our solution gets better and better, because obviously we've got the constant improvement of the data set with the machine learning, and we do something a little bit different in that we anonymize all of our execution data once it's gone through the TCA, and that sits within the smart broker router, and then all of our customers benefit from that data. You can't trade on the back of it or anything like that. It's anonymized and so on, but it's a way of smaller firms and medium-sized firms, even larger firms, leveraging the data set within our smart broker router to improve their end customers' results, really. So that's really why we're different as well. And firms can't do it on their own. So if I'm sitting in a small sort of asset manager and I'm trading into like a French stock, and I haven't traded a French stock VWAP over the day for a few months, the data set that I have isn't going to be particularly strong in terms of having enough data to know where to place my order in XYZ. However, with the data set that we have, the customers trading different markets, different stocks, different size cap every day. So therefore, if I now place my order in XYZ, my order is going to be routed to the most efficient execution algo for that specific order at the best performing broker, with various other factors figured in, including execution rates and so on. So it's a really great way of achieving economies of scale across data, which is a bit different as well as everything else.
So you've intimated this all the way through, but if people are here listening to this at the moment and saying, look, I understand these sort of issues, and this sounds my cup of tea, who should be reaching out to you?
We often talk to the sort of the C-suite of firms, because obviously they're looking at their total costs, but also the heads of trading also. We're interested to talk to them, and we've got a lot of good relationships going with heads of trading now, because they see that this is the way things are going, and actually we are their friend, as opposed to a threat coming in and changing everything for the worse. I'd suggest that if they are interested, reach out to us, look at our website, www.BTONFinancial.com, and we've got all our contacts on there. So I'm happy to have the discussion with anyone at any time. Yeah.
Fantastic. So real value that you guys are adding to to those sort of businesses at the moment, and doing something different and providing genuine benefit to the industry. So
yeah, because the pressure is on the industry. Sorry to jump in, but yeah, the pressure is on the industry. It's been a tough year for everyone. There's been the inflows aren't going to be quite as strong if the economy does end up being slightly weaker than we'd hoped for, it's the whole active versus passive sort of discussion has been going for quite some time now, and a lot of the capital is moving into these passive funds. So there needs to be a way of, and there's a lot of cost pressures. So costs are going higher, revenue is becoming lower, so margins are being squeezed. So there needs to be a way of sort of becoming slightly more efficient and doing things in a slightly different way to achieve hopefully better results.
Yeah. Look, I think that's a really interesting point to raise there, because look, a number of companies I'm talking to are aware of this sort of growing pressure that institutions are under at the moment, right? Increased cost, squeeze margins, and it's how can we efficiency for me is one of the core words of 2021. Businesses are looking for those efficiency gains and are looking for companies that can help partner with them and lead them on that that sort of road to Damascus to really drive them further forward. So if we finish on one thing, I'm really interested in everyone's take on 2021. There, you mentioned, look, if the economy doesn't grow as we thought it was, there are so many unknowns out there at the moment for so many different reasons that still remain. What's your take on what we'll see in 2021, both from a technology angle and some of the core trends that you think will develop over this year, but also on a financial and economic basis? What do you think we're in for?
Yeah, so obviously the only constant is change. It's an awfully hard one to predict at the moment. The markets are incredibly strong, where there's so much stimulus in the markets pushing everything up. So the markets continue to be strong. There's interest in the yield curve and see if the rates can maintain their low levels. But certainly from a kind of, let's be a positive on the personal front. For those viewers that are in the UK, they know how much fun summer can be in the UK, and we have long, dark winters, and it's often quite good fun as spring comes out and we all kind of stretch our legs and get out there. That it's actually usually quite a lot of fun. This summer could be that times 5, as we've all been in hibernation for quite a long time now. So as we all come out and it's positive news. This vaccine is becoming widely adopted, and there's been 5 million, I think, so far that people have taken it. So we'll all be able to move slightly more freely, and I think it actually could be an awful lot of actually fun from a business perspective and a personal perspective, as people sort of start getting into gear and enabling and enacting this change that they've been putting in the plans in place for the past year. So I think there's going to be quite a lot going on this year. Certainly from our perspective, it's good, and from living in the UK perspective, it could also be good fun. So everyone's so keen.
I think it's exactly. I think it's the UK and beyond, isn't it? Look, we look at if you look at the macroeconomic situation and just the sentiment of everyone is keen to sort of move on, and there's a lot of pent up frustration that I think sometimes can come out in a really positive manner. We've got governments in 2 of the most developed countries in the world who are very keen to keep that stimulus moving further forward in that economy to rebuild, with Biden coming in with obviously his points to prove out in the States where I know you're opening, but also here and having got Brexit done, there's a lot of pressure on the government to make sure that getting Brexit done does actually leave a positive impact into the economy as well. Plus the world opening back up again, as everyone's got sort of full motivation to see over the course of the next couple of months. So yeah, look, I share your excitement with what lies ahead of us, and I think there are plenty of opportunities out there to utilise exactly what you've been talking about there, to provide genuine solutions to companies there who will have, irrespective of what happens, those challenges about margin, pressure, to ensure that they're there to be able to move further forward. So, Daniel, look, I understand completely why you've been getting the plaudits and the awards at the moment. I think it's a great space to be in. I think the asset management world has been crying out for innovation for some time, and it's really good to see that there's products like yours and companies like yours who are now driving that sort of change. And I wish you nothing but the very, very best of luck for the future of what I'm sure will be another stellar year for you guys. Thanks so much for joining us today.
Thank you so much. Yeah, thanks a lot, and thanks to the viewers.
Listen, great to speak to you. Thank you all for watching, and we'll see you soon on another episode of Fintech Focus TV. Thanks so much.